Hello, welcome to Chapter 9, Going Concern, and this is the ACCA P7 Advanced Audit and Assurance. Okay, as always, I'd like to start with the big picture. You will be aware from your earlier financial reporting studies that going concern is one of the fundamental assumptions underlying the preparation of your general purpose financial statements. So your accounts, your profit and loss and your balance sheet are prepared on the basis that the business will be in existence the following year. If you don't prepare it on that basis, then it's the liquidation breakup method and the whole thing changes. Sometimes we overlook that obvious assumption. Anyway, it's vital that you apply the appropriate application of this assumption to give a true and fair view of the business. Clearly something you've studied before at F8, so hopefully not too long ago. With the 2008, since 2008, economic climate has changed. There have been lots of businesses falling over and failing, and unfortunately therefore auditors are being more cautious and prudent when doing their sign-off and really thinking about, will a business be around for 12 months after the balance sheet date, and actually have amended some of their accounts reporting requirements within the director's report, etc., to try and explain the basis of the preparation of the financial statements and how long going concern is considered for. So with that being a topical point, it's certainly something that will be examined. It's well known. It's good that you read the press and keep an eye on the papers, and it's topical. It is therefore an important area for your P7 studies. Examination questions in this area often have an element of reporting. So as we talked earlier about what does a audit report look like, qualified, unqualified, modified, emphasis and matter, you tend to have the two of them going together, going concern and audit reporting. In practice, a going concern qualification is perhaps one of the most difficult for an auditor to give, because you, by saying something, i.e. it's not looking great, it then becomes a self-fulfilling prophecy. So in some ways you don't want to say things that are not looking great, because if you don't, then people carry on as selling to that business, dealing with that business as both customers and suppliers. So yeah, it's difficult. It is a difficult area to look at. The examiners expressed disappointment in the past with the standard of many candidates' answers. Going concern considerations may also apply when dealing with questions relating to audit risk and subsequent events. Okay, so it can be in a scenario based, coming up with lots of different aspects of the syllabus. Key terminology: going concern. The concept of going concern is based upon the assumption the business will continue to exist as a viable commercial entity for the foreseeable future, without the need for any significant cutback in its present level of activity. Foreseeable future is normally taken as being a minimum of 12 months from the current accounting date, so the balance sheet date. So if it's December year end, 31/11, you assume the business will still exist a year later. Okay. If for any reason management consider a shorter period, then there should be a note to the financial statements indicating what that shorter period is and management's reasons for choosing it. Audit approach. The auditor should always be alert to possible indicators of going concern problems. A useful starting point for consideration of such indicators may be to relate to the elements of business risk, which is operational, financial and compliance. So it's not audit risk, this is business risk. It's important that when risks are identified, that the auditor also considers the possibility of mitigating factors which might counterbalance the indicator of a possible going concern problem. So there's some examples in the following table. For instance, you have an operational risk where you've got a shortage of essential raw materials for manufacturing process. So there's a lack of raw materials. But mitigating circumstances could be that the R&D department are close to finding a synthetic alternative. Financial risk could be material forex losses are being incurred or possibly will be incurred. However, if the Treasury Department are doing their job, they're hedging, and therefore you are mitigating, reducing the risk to forex losses, financial risk. Compliance. There are numerous fines for breach of anti-pollution legislation. The mitigating factor could be new, more environmentally friendly manufacturing process is about to come online. Question, of course, about to, what time frame, what cost is that going to be, which you then have to discuss with management and assess. Specific audit procedures would include apparent assessment of current and projected economic environment in which the company operates. Okay, so you look at the current environment in which the company operates, also the countries within which the company operates. Assessment of the state of industry sector in which the company operates. So certain sectors have been hit harder, banking, car, that real estate, than other sectors during the economic climate that we're now experiencing. Perhaps review your correspondence files and board minutes for evidence of significant disputes with customers, with suppliers, this sort of thing, legal issues. Review the subsequent period cash flow and profit forecasts. Always assuming the questions these are available and the client are doing them. Okay, and that would be post balance sheet stuff. Discuss management procedures and review and obtain representations. That's your letter which says that management have discussed and disclose everything that you've asked of them. Audit report considerations. As always, the type of audit report to be issued will be dependent upon the circumstances and the auditor's assessment of the materiality, key word, of the issues involved. If something isn't material, then it's not really an issue. Obviously you add up together the different issues to work out whether altogether materiality is now an issue. The following table summarises and provides a useful summary of the most likely scenarios. So if you can learn this by heart, you will be there for an exam situation. Going concern basis used and considered appropriate with no related significant uncertainty. Report implications, none. In other words, it's an unmodified audit report. If there's going concern basis is used but there is appropriateness dependent upon some significant uncertainty which is fully and adequately disclosed, it's still an unqualified audit opinion, but you use an emphasis of matter paragraph to draw the reader's attention to the significant uncertainty. Okay. If it's still a going concern basis for preparation of the accounts, but the appropriateness of that is dependent upon some significant uncertainty, which is either not disclosed, which is either not disclosed at all, or is not. It is disclosed but not adequately. Then you would qualify your opinion on the grounds of disagreement, probably adverse rather than except for. Okay. Now, if the going concern basis is used but in auditor's opinion not appropriate, so it's not the correct approach at all, it almost should be a liquidated breakup basis of preparation accounts, you would issue a qualified opinion on grounds of disagreement, probably adverse, again rather than except for. The final one, going concern basis inappropriate, but the financial statements have been prepared on an acceptable alternative basis with adequate disclosure, you actually then do a unqualified opinion, but you use an emphasis of matter paragraph to draw attention to the unusual circumstances. So almost an akin to this one. but it has to be adequately disclosed the fact that the going concern basis is inappropriate to use. Otherwise you're back to the one above. Okay, so those go together, going concern issues and the reporting scenario. It's worth definitely spending some time going through that table and trying to rewrite it in your own words so that you can remember that for the exam. It's a good chance of it coming up. Okay, that's the end of the recording. See you in chapter 10.